Good afternoon. So what is a company director? They provide oversight and direction on behalf of its shareholders or members. So basically what a board does is it makes the really strategic decisions that drive a business forward. And the thing to note is that the expectations of boards have increased exponentially over the last number of years. So in the last 4 weeks, among the topics that have come up for discussion are the future of work. So you're asked to decide on a policy in a company of how do people work in future? Do they work 2 days at home or 3 days at home? Do they work 4 days at home? Do they work all the time away from the office? So that's the type of decisions we're being asked to make on a daily basis now. There are different types of directors. I started off my career as an executive director in LBBW Bank. So I was employed full-time by the bank and as the finance and operations director on the board, with finance operations, risk and IT reporting to me. And I reported on that to my board colleagues who are a mixture of executive directors and non-executive directors. Non-executive directors are typically part-time, and in the real world, they generally get paid a fee for that. So I'm now a professional non-executive director. You can be two types. You can be an independent non-executive director, where you're completely divorced from the company. You have no relationship with them. Or in my case, I serve on one board as a non-executive director, where I represent the interests of a particular shareholder on that board. My duties and my responsibilities are no different because I'm a non-executive director against an independent non-executive director, and all directors are equal. And then there are non-executive directors who are part-time or not paid a fee, for example, on the board of a charity. I would always urge anybody who has a skill set which a not-for-profit organization or a charity can avail of, that part of giving back is doing something like that. My own personal deal with myself is for every 3 pain rolls I do one for free for a charity. So I sit on the board of Laura Lynn, Ireland's Children's Hospice, and I also chair the board of directors of Airfield Estate, which is very close to me here. A de facto director then is one who is not called a director but acts as a director. So it may be, for example, a dominant shareholder in a business who attends board meetings and acts like a director despite the fact that they're called one. So you become then a de facto director, and you're regarded in law as being a director of the organization. A shadow director is very much like a de facto director. You're there in the background. You may be driving, for example, funding in an organization, financing, maybe driving something like a takeover, something like that. So shadow directors, so de facto directors and shadow directors are in law. They're the same responsibilities as somebody who is an executive or a non-executive director. An alternate director then sits on a board if the sitting member of the board is unable to attend. They can appoint an alternate to attend the board in their place. So that's the role of an alternate director. So in my career so far, I've been an executive director, I've been a non-executive director, I've been an independent non-executive director, and independent non-executive chair of board. So I've fairly broad experience across the sector since I started my board career. And move along. So who can become a company director? Anyone over the age of 18 can become a company director. And if you look around, would you trust your 17-year-old? I probably wouldn't trust my 17-year-old daughter to be a company director. So really you have to be over the age of 18. The more experience you have as well, I think the more you can gain. But I think that there's a huge amount around diversity and inclusion and trying to get an age spread in your board of directors. I know some boards, for example, have youth advisory councils advising them, where people may not be 18 or maybe in their 20s, don't quite have board experience yet, but are advising the organization. That I've seen that operate quite well within the not-for-profit sector. Not currently declared bankrupt. It's something you try to avoid, and your responsibilities as director to make sure that the company is solvent at all times. So you try to ensure that right across your career. And not disqualified from acting as a director by a court. In that case, you're not allowed to be appointed, and you're not a restricted person, or a person who's failed to satisfy a court that they act honestly and responsibly in relation to an insolvent company. When we come to directors and officers insurance, you can see the situations that arise around that. And also your role as a company director also changes if the company becomes insolvent or begins to trade and doesn't have enough cash to actually support the business. Your responsibility changes from being to the members or shareholders of the business to being just to the creditors of the business. So you always try to ensure any company you're involved with is solvent at all times it's in business. And move along. Okay, your first duty, comply with legislation. That's really it. In my role as the chair of a charity, I asked once upon a time when I joined the board, I said, roughly how many pieces of legislation is this organization subject to? And the answer I got was roughly 150. So they are fairly onerous in some cases, not so onerous in others. So the main one you need to comply with is the Companies Act. There's Companies Act in Ireland, there's the same in the UK and other common law countries. So you got to comply with the relevant company legislation in your jurisdiction. There's a general principle that your fiduciary duties are owed to the company as a whole and not to an individual shareholder or group of shareholders. So in the instance where I'm a non-executive director on the board representing one particular shareholder, my duty is not just to that shareholder, it is to the company as a whole. So I've got to do on that board what benefits the company as a whole rather than just the shareholder I represent. So it's quite a balancing act to get to do that. There may be some things where the company's interests are ahead of the shareholders' interests, but that's fine. Everyone can do that. Fiduciary duties are normally codified in company legislation or subsequent case law. In that case, we look forward now in a moment or two just at the fiduciary duties under Irish law, which are included in the Companies Act. One of the duties as a director is to treat everyone equally. So you can't act in the preference to prefer one shareholder over another, a minority shareholder over a majority shareholder, or anything like that. So you've got to make sure that you're treating all shareholders fairly and equally over the course of your role. And if a company becomes insolvent, then their duties will be to secured and unsecured creditors. There's a famous saying by Sir David Tweedy, the chairman of one of the accounting boards: cash is fact, everything else is a matter of opinion. If your company doesn't have the cash to continue in business, you as a director then are exposed. You generally don't want to be in a situation where it's what is termed to be a creditor's liquidation rather than a member's liquidation. In a creditor's liquidation, basically the company you're on the board of is being made insolvent and liquidated by people to whom you owe money. And in that situation, the debts exceed the assets of the company. It creates complexities for you. It's something you're going to have to be able to explain in the future if, for example, you're going to apply to be on a regulated board. So I would always urge you, if you're on a board and it looks like the company is teetering, that you come to a resolution, that the company, you resolve to liquidate the company before anything else happens, to make sure that it's a solvent liquidation. Early on in my career, I learned that lesson. A board where I was a chair, the company had a fantastic product, but just sales weren't quick enough relative to the expenditure we had. There was a venture capital company involved, which funded it the first time, a small bit of funding the second time around, but it just, the product wasn't working. It was a regulated entity that had a capital requirement with the Central Bank of Ireland. So we couldn't breach that capital requirement. So eventually, the rest of the board, we talked about it a number of times, but we actually had to say, okay, we need to actually stop business now and liquidate the business now. We did deals with a couple of the creditors to whom we owed money. We were able to do a solvent liquidation, appoint a liquidator, and clear all the debts of the company. There was no money left to distribute to the individual shareholders at that point in time, but everybody got paid their debts. It was tied with a nice bow. The people who were the founder directors, unfortunately, had to go and start again doing something else. But from a corporate governance perspective, it was done tidily, it was done easily, and everyone walked away happy insofar as they could. But In that case of insolvency, you really got to mind yourself as to what's going on and what your duties are. And talking about directors and officers liability, I'll come to a case which I heard described by an insurer in relation to this recently. And moving on. So here are the fiduciary duties and responsibility of directors in the Irish Companies Act, right? This will generally be true, or a version of this will be, it's true in the UK, it's true in Canada, it's true in South Africa, it's true in lots of countries that have common law systems. So really, here are the duties that you've got to comply with. Are some of these more important than others? Yes, they are. And if I was to talk about two in particular, I think that are more appropriate are act honestly and responsibly. That's kind of, if you look at it, kind of at the top of the pyramid. I think if you act honestly and responsibly, I think that can actually overcome a lot of the issues that you may have as a board director. If you're doing that at all times, then you're avoiding conflicts of interest. You're exercising due care, skill, and diligence. You're having regard to the interests of the company's members. The other one, which I believe is very important here, is exercising independent judgment. As a board director, what's not here? Okay, so the big thing that's not here is, what are you expected to do as a director? You're expected to make decisions, right? So even if you join a small not-for-profit board, I would urge you to do three things. I would urge you to read the board papers in advance. I would urge you to turn up at the meeting, and I would urge you to participate in the decision making, because they're the three things that people are actually trying to utilize, trying to get information, trying to get help from you and your expertise, as that may be, to help them make better decisions than they would have without you. So interestingly, making decisions is not here as a duty or a responsibility, but is actually one of the key things you actually need to do. Conflicts of interest is an interesting one. Can you have a conflict of interest? Yes, you can. Can you operate as a board director with a conflict of interest? Yes, you can, but you must declare it. I had a situation recently where a family member is a member of a board that provided a quote to a board I was on to provide a service. So what I did in that case was I stated my conflict of interest at the outset of the board meeting. And then I recused myself from the vote that happened at board level in relation to that issue. So that vote was undertaken by my colleagues. I didn't participate in the vote. I couldn't influence whether my family member got the provide the supply or not. So I think it's very important that you avoid conflicts of interest, and even the perception of conflicts of interest is as important as actuals. It may be one of the reasons why you might resign from a board if, for example, it acquired a company in which you're a significant shareholder. You could have a situation there where the conflict of interest is so high you may need to resign in due course. So really, for me, the key ones there: acting honestly and responsibly. Firstly, independent judgment. Secondly, and then the avoidance of conflicts of interest between the company and the director. That can happen in any other sort of ways. So the example I gave you is one that's happened in my situation. It can happen in lots of other different ways. If, for example, your pension fund is managed by someone who's trying to provide a service to the company, again, that's something you should declare, for example. And overall, what you're trying to do here is, in your role as a director, what you're trying to do is to provide the best decision for the company and make the best judgment that you can make with the information you have available. So if you take the role of a company director at the moment, is you're a bit like a cabinet minister in Ireland at the moment, right? You're trying to make the best decision possible with the information that's to hand at the moment. It's not easy. And as I said earlier on, it's becoming more and more difficult. And you're getting involved in more and more things. If you look at the things that board directors have been involved in recently, so as I said, we have the Future Work one. Some boards in the States have taken stands on the voting rights in Georgia. We have diversity and inclusion coming onto boards. We have Black Lives Matter being a subject of board discussions in a lot of US companies and other companies. So all these issues are issues that are now coming to the board for discussion, and the expectations on board directors, which used to be, long time ago, used to be quite minimal, have now actually got quite high. Really, in the past, you would have thought that company directors do three things: appoint the CEO, decide the strategy, and approve the annual accounts. And that was it. You were done if you undertook those three actions. However, things have moved along substantially since then, and we're now in a situation where it's quite onerous what you're signing up to do, even on a charity board at this point. So if you want to move on, Ishi. So other duties, as I said, appointing company secretary is one of the key ones. The financial documents and the annual financial returns are part of that, and preparing the director's report. As you will have learned, my background, I'm a chartered accountant by profession. I can read financial statements and make sense of them. I would probably say to people that having some sort of financial background is helpful, or financial knowledge is helpful to becoming a good board director. Now, that's just my point of view. I'm sure that people in the legal professionals say exactly the same thing about it. But I think that financial knowledge is one of those fundamental building blocks that if you have it, it makes you a better board director than one who doesn't, because you understand the financial impacts of everything that's going on. And it also harps back then to the cash is fact, everything else is a matter of opinion. Has the company got enough cash to run its business for the foreseeable future? The annual financial statements, generally depending on the scale of the company, they are either audited or unaudited. Smaller companies are typically unaudited in Ireland and other jurisdictions. Larger companies are all audited. You will have a professional auditing firm come in to do that. However, the annual financial statements are the responsibility of the directors to make sure they're true and fair and give a true and fair view of the company at that point in time. So the auditors will basically sign off a set of financial statements saying, yes, the directors have told the truth. This is a true and fair view, and we've checked stuff, and that's all fine. But remember, it's the director's responsibility primarily to actually undertake those financial statements. And moving on. Consequences of breach of duty. You don't want to be doing this, is the first thing I would say, right? Anybody who breaches their duty as a company director is, certainly something that if it makes its way, you will suffer a huge reputational damage. Your career as a director are probably over if you're found guilty of one of these. So in Ireland, it's the Office for Director of Corporate Enforcement who may take a legal case against you and may seek to have you disqualified. And you may even be subject to criminal prosecution if, for example, it's a health and safety breach or something along that, where the directors as well as the company can be found guilty of things. If you make any gain, so if you have a conflict of interest, you buy an asset cheap or something like that, you make a gain that is part of that transaction. You need to account to the company for that. You need to compensate the company for any loss of earnings that may have caused as a result of that breach of duty. So if, for example, your company, you're on a board of directors that appoints a company you have knowledge of or have a family relation working in, and your board of directors decides to purchase a service from that company at 100,000 euros a year higher than anybody else or that other quote you've got, that's a breach of duty. That's something you shouldn't be doing. Would that lead to disqualification of a director or removal from office? It could well do, should it arise in that situation. So, we're back again to the duties, the fiduciary duties. Act honestly and responsibly and with integrity. If you're doing that, that's fantastic. And moving on. The importance of directors and officers insurance. So in the lecture I give on the diploma course, I ask people to take away three things from it. It's what the duties of a director are. You're there to make decisions. Secondly, know what a risk register is and how to use it. And then thirdly, get directors and officers insurance. So my contract of employment with any board has that the company will provide directors and officers insurance. Why is that? Who can sue you as a director of a company? The answer is virtually anybody can sue you. So that's a situation that you need to protect yourself and protect your own assets against that. You can be personally liable for costs if you haven't acted in a professional manner. And we have seen cases taken against individuals around this. I would urge people to ensure that in their letter of appointment is that there's an obligation on the company to provide directors and officers insurance for you. And I would regard it as a red line issue for me. I wouldn't actually join a company where the company isn't willing to do this. So here are some of the reasons why you would have this. So active employees where the company has committed a criminal offence, you as a board director have an issue there. You can be subject to government or regulatory investigation. So all the examinations that you would have seen by, for example, the Central Bank of Ireland as a regulator, or by the Competition Authority in Ireland, they're issues that you need insurance for. And who can bring an action against you? Virtually anybody. So current employees, past employees, suppliers, former board members, current board members. There's a whole host of people who can take actions against you. I don't mean to scare you too much, but you need to be aware of this, and you need to protect yourself in that situation. So I think in directors and officers insurance for me is a red line issue. The company's not willing to provide directors and officers insurance. I say thanks very much indeed for the opportunity to join your board, but I'm not going to take it up at this particular point in time. Why? Because I believe that I'm not adequately protected. In my situation, because I have a portfolio of directorships, I try to protect myself in the event the company doesn't pay a premium. So I have my own, I call it a super policy, over and above all the other D&O insurance policies that are there in the individual companies. So I have a policy in my own name that protects me in the event the company's policy lapses or doesn't protect in that situation. Where did I learn that? I learned that from a colleague who is a director of a special purpose vehicle of one of the investment banks that went under in 2008. The premium didn't get paid, and he was in a situation where he had to keep working to get things resolved. Eventually they paid the premium again, and it was all covered again. But that's something that was overhanging him at that point in time. So in terms of some specific claims examples, so I saw a presentation recently from an insurer in relation to this. So following a takeover, shareholders commence an action against the directors alleging they were misled as to the terms of a deal. So if being on the board is quite important, that you have adequate documentation of everything that's there. So boards of directors are becoming a bit like the FBI, right? If it's not written down, it doesn't exist. So in that situation, possibly the terms were not adequately discussed, not adequately described, or something like that. But that was a claim that arose. A creditor pursued 3 directors. Why? Because those directors were continuing to trade when it was obvious to the supplier that the company was insolvent. So again, you're in a situation there where you're breaching some of the fiduciary duties and the duties under legislation. If you really, really, really want to scare yourself, you should go and read about the case of Equitable Life. So Equitable Life, the outgoing board was pursued by the incoming board. That case went on for a number of years and went to court. The costs involved in the case were £75 million sterling. It went on for a number of years. The people who, the outgoing directors who were sued, were all found not guilty by the courts. So their reputation was intact, but they needed directors and officers insurance to pay the £75 million costs that arose. So get D&O insurance if you're taking up a board position. Believe me, you will never regret it, and significant others in your lives will sleep better when they realise the house isn't at risk because you're a board director.